Alan, you speak Mandarin and Cantonese. What prompted that? Talk to us a bit about your experience, how you ended up speaking, uh, these languages, and what drove you to do so.
The very honest truth is, I'm Canadian, and so all Canadians are meant to learn French, and I really sucked at it. So when forced to pick a language, I'm like, well, if I'm going to start fresh, I might as well just start with something totally different. And so I picked Mandarin in university, and and it was probably the most challenging thing I ever did, and one of the most fulfilling, and one of the things that really sort of set me most on my path, which is like I've been very focused on uh, living on frontiers and building interesting things, interesting companies on frontiers. And so what started off is kind of like a little bit of like maybe laziness or like aversion of something um, that I wasn't very good at ended up becoming, a real strength. And then I lived in China for a couple of years after I studied Mandarin in university, and then I went down to Hong Kong and I picked up quite a bit of Cantonese because when you can read and write, then you just have different pronunciation for Cantonese version. But that was funny because when I first went to Hong Kong and I would speak Cantonese, I sounded like a mainland Chinese immigrant to Hong Kong because I would just guess words that sounded like the Mandarin, and people are like, "I'm very confused by this situation."
That's pretty funny. Yeah, that's very cool. Well, that's amazing. Well, yeah, maybe kind of digging more into your background, Alan, as catch us up today, kind of what you're doing today, but maybe giving us the journey to that point would be awesome.
Sure, yeah. So I'm a tech entrepreneur. I built the majority of my career in Asia. So, like I said, I lived in China for 98, 99, and then I went down to Hong Kong. I lived there for 16 years, and I built four companies and sold them primarily in the compliance technology space. So some of it was HR compliance, some of it was third-party compliance. In 2009, we went very hard into something called third-party compliance, knowing that compliance post financial crisis was going to become a major expenditure in a lot of large organizations, and then built a few different companies around that and that thesis. And we also, started off with a not very technologically advanced project and ended up with like a pure tech sale that was services on top, and it was all SaaS, kind of SaaS tech that we were selling into Fortune 500 companies. And I think what what the sort of common theme is, again, kind of living and building on frontiers, and especially technology, and understanding sort of what's at play and what the best kind of risk return is, and how to manage your risk in some of those environments. I mean, we were in compliance, so not only was the product very like risk related, we were also, I think that's part of building on frontiers, both tech frontiers and geographic frontiers, about like, making sure you're managing your risk appropriately.
Absolutely. And how'd you get into crypto?
It's funny, actually, I had a technologist working for me in 2017 when the two cycles was taking form. We were kind of both curious about it, so I sent him off and he did a bunch of research and we sort of started looking at it, and we decided, it wasn't right to actually, bring some of that technology into our company, which is what we were looking at, which is why we were looking at it. But ever since that time, it really, resonated with me, the values. But at the time also, most of the sort of applications I couldn't wrap my head around. I'm not smart enough for that. Like I couldn't. I think, like, to be honest, I kind of struggled with like, well, what's the application of a smart contract? And I could think about it hypothetically and or theoretically and kind of understand a little bit about it, but it wasn't until I really saw it in the form of DeFi Summer where I was like, oh, now I understand. This is really cool. And so DeFi Summer for me was really um, where not only was I really interested and became like enveloped, um, but for me, I think it really sort of embodied what the technology, like the real promise of the technology, which is that even an established industry like finance can be, can be really disintermediated by blockchain technology, and that for me was like I was obsessed ever since then. Just ask my wife.
Very cool. What attracted it to you? Was it the NFTs, or what did you see there that caught your eye?
I do have a couple NFTs, I have to say, but like I know definitely not the NFTs. No, for me it was more the trustless, permissionless nature of smart contracts, especially as applied to decentralized finance. So I think we will see some more interesting non-DeFi applications. I don't think we've seen enough of them. It kind of bothers me that we haven't seen more, but I think there are some interesting ones out there, and we can probably talk about that. But decentralized finance to me was beautiful in so much as uh, it proved to me that blockchains were not just about speculation and about a new kind of technology that involved a sort of formula for speculation, but instead that was completely wrong. What it was really all about was that it's kind of the completion of the internet. That like the internet as fully formed wasn't it wasn't fully formed with Web 2. The thing that it was missing was the ability to track and transfer value, not just data. And that blockchain really enables the internet primitives to be able to exchange value natively. And that concept, as applied to decentralized finance, was just astounding for me. Now, I'm not going to say that like at the time I wasn't, doing some silly things like farming, 2000% APYs but you learn quickly. You learn quickly. See, when value is on the line, you learn very quickly. You're like, wait, what? What happened to the token? How could it have gone to zero if they're just printing more, and that's all the token is for. But anyway, no, I mean like you learn very quickly, and the degree of innovation, for instance, looking at Uniswap and the way that Uniswap has developed the AMM and iterated on the AMM, I think, is really proof that there's massive amounts of innovation which will be unleashed by blockchain in terms of this, like the value creation and the transfer of value through these primitives. So that was really
Yeah.
exciting for me.
Yeah, very cool. What are you kind of currently excited about today as we kind of move forward in this ecosystem?
Yeah, I guess like I'll be frank, I think that the Bitcoin ETFs in the United States were on the one hand great because like it kind of brought us out of the doldrums of the bear market, but it maybe also was a bit premature in so much as like I would have preferred to see uh slower price appreciation while we were still building like this next iteration of some of the infrastructure. So when you look at, Solana and what Solana's been able to accomplish and some of the also the challenges they've had, and that they've, they're addressing, but things like, the other client Fire Dancer that Solana is bringing out, that's not until probably Q3, Q4 this year. When you look at Ethereum and you have, Denkun really just sort of came through such that L2s are now much cheaper to interact on. And then you also have things like Eigenlayer, where you have this ability to rent Ethereum's security, is the way I think about it. All of these are they're infrastructure, they're pieces of infrastructure. And to be frank, I would have been probably I think the Bitcoin ETFs accelerated the price movement, and it might have made for a more sort of sustainable growth pattern if we didn't have that acceleration on price, and instead we had like this continued development of technology without some of the noise that the price brings. because what we're really working towards is that on these technologies, on these new pieces of infrastructure, you will have new and interesting use cases that will be borne out. And you look at some of the stuff like in DePIN, where Helium is building out, essentially like a decentralized mobile network, and uh, you know that could accelerate because of price. But I think them having migrated to Solana shows that, like, some of the infrastructure pieces are still just sort of getting sorted out, and it is a really exciting time, and there are lots and lots of different kinds of pieces of this infrastructure that still need to get sorted. So I think the view is that um, it's very likely that very early on, we're going to be continuing to talk about different pieces of infrastructure, like, well, how does eigenlayer work? And if we have Denkun and we have all these L2s, how does that not start to, uh, you know, um, you know, parse out and split up all of the liquidity and make it much more complicated to interact with? And so, we haven't solved these problems. There's still stuff coming. Like, I think account abstraction, chain abstraction, uh, will start to, gloss over some of these divides, and make it a more seamless experience. And then builders, I think, will be able to really come in force, and build things which are really, really very, very interesting for people who don't need to know about what chain they're on, or how much liquidity there is in a certain pair, or moving and changing wallets, changing chains in their wallet, and those kinds of things. So I'm quite hopeful about where we are, but I my gaze is firmly on that last mile, and I think we still have a while before we see some really, really interesting stuff where you have 500 million people, billion people using whatever it is, a game or an application.
Yeah, I love that. You're definitely incredibly deep in the space, so I definitely want to dive into some of these topics individually. But let's start with to take a step back. Why don't you give a high level of what you guys are doing at Golden Pear, and some of the types of investments you guys are looking at and making these days.
Yeah, so Golden Pear is a liquid crypto hedge fund. So everything we do is relates to something that already has a token. From a research perspective, I more or less shared our thesis, which is that I think we believe that, for the moment, infrastructure is the most important part. That building the foundations of and taking positions in foundations that will be built upon is crucial, and that probably later in the cycle, so maybe 12 months from now, you start to see some really interesting applications, and whether that's in like gaming, social, more DeFi, payments, I think could be really quite interesting. You know that that that's probably the order of operations in which we think it is going to be interesting. And then, strategically, everything we have is on chain. And so we spend a lot of time in decentralized finance and interacting with smart contracts to be able to, generate yields. And that's also, how we obviously generate yields and compound those yields, but it's also how we, keep very close to the actual product that we believe in, and making sure that we're heavily involved in the ecosystems that we believe in. So that's another important part about what we're doing.
Yeah, that's great. I'm curious too, just from your background. Obviously, we talk a lot about DeFi decentralization. There's the risk component people bring up, right? And you being from a compliance background of owning a couple of compliance companies, how do you think about risk relative to Golden Bear and how you operate on a daily basis?
Yeah, it's always been it's like the definition of my entrepreneurial career. On the one hand, I'm an entrepreneur, which is sort of how you take high risks, and then I kind of applied it to this super low risk industry of compliance. So there's always been this like dichotomy. But it's no different, I think, in the fund space where like there's this huge kind of design environment about how you can construct things. And the fact remains that no matter no matter your strategy, there are low risk and high risk tactics to employ. And so, for instance, um, the you can set down a strategy and then just sort of like go off and try to make money. Whereas like making sure you have proper compliance guidelines, making sure you have, your guardrails for like, you know, leverage and market exposure and all of those different kinds of things end up becoming extremely important, along with the ideas of like, well, how much can we put at risk within one protocol, and also having a compliance structure is actually a major differentiator, especially when you're looking at the way that funds operate. It doesn't mean that you negate the risk. It's still there, but you can absolutely reduce the risk through certain both operational and technological methodologies. And I think like maybe that's one area that um, frustrates me a little bit in terms of, some investors probably don't care about that as much as they probably should. And they sort of think like, well, crypto's risky, so I'm willing to kind of just take this risk anyway. It's not that you can't, manage some of those risks appropriately. And so, I think like a due diligence process with regards to, looking at funds is probably pretty critical. What kind of wallet, solutions are they using? Is it on chain or off chain? What kind of diligence has been done on vendors? What are the caps on like protocols, on tokens, on exposure, how much leverage is used, like all of those different kinds of things, I think are key questions to ask that are pretty important. And I think, I'll be frank, I think probably there aren't great answers.
Oh, it's all good. No, it's interesting because obviously there's a lot of technological change within the space and the ecosystem, and then also the process at which you deploy.
Well, and honestly, it's like it's really expensive. It's really expensive to run it in a like like in a as secure as you possibly can, as compliant as you can manner. It's very expensive. And that's what fees are probably worth paying for. It's like it's a risky asset class. So, it's also, I think, probably something that investors should keep in mind.
When it comes to expenses, what type of expenses do you guys find cumbersome on the compliance side when it comes to maybe wallet or custody or different things like that?
Yeah, I mean, wallet, custody, if you're interacting with smart contracts, there are fees for those, which can add up. There are, I think, even like legal structure and having like proper advisors, making sure that everything's done in a fully compliant way, security operational reviews, all of those things add up. They get to be very expensive. And it's fine, happy to pay it, because it also becomes a bit of a differentiator.
Cool. Well, yeah, very good points. Definitely, something that LPs should definitely be, thinking about, top of mind. Where are we at right now in the crypto cycle, in your opinion, Alan? We've come a long way since, last fall, early this year. What are your sights in the market right now?
It's always hard to say, but I think our view is that as we're still putting together the pieces of the infrastructure, and that as those pieces of infrastructure get built upon, you'll start to see better applications. You have this uh, enormous change that took place, a cultural change, a cultural shift brought on by the Bitcoin ETF in the United States, and I can talk more about that in a second. But I think that probably that combination of things means that we are probably in like the maybe fourth or fifth inning And I think even the consolidation that we're seeing at these levels, it doesn't bother me. You can't just go straight up. You know, 18 months ago or whatever it was, we were sitting at 16K Bitcoin, and today it's at 60. Like you can't go up in one fell swoop. Um, but I think the most important thing, as I said earlier, like the biggest factor in this cycle is clearly the Bitcoin ETF. And I think the power of that was not just that, there was $12 billion of spot buying of Bitcoin, which is great. I'm not displeased about that. It's actually more psychological. Like I think if you look at, what BlackRock and Fidelity have done, for instance, to include some of the like crypto exposure in some of their portfolio ETFs. If you think about the effect of that, that's, regular middle class people who have product with those companies that now say like, oh, hold on a second, I took exposure, or the fund that I have had exposure to Bitcoin through the BlackRock or Fidelity ETF at 40K when it first came out, and it's worth 60. Like, wow, that did really well in my portfolio. And I think for those guys, the switch from like, oh, what did you think Bitcoin was really about? And my guess is a lot of people would be the first thing that they would say is FTX. And then it would go on from there. FTX, Silk Road, Mount Gox, all these kinds of things that are like, well, it's most known for its poor attributes, for attributes which really can be held against it. Um, and now I think the idea is once they look into it more, once advisors are not just, putting them in it, but also saying like, hey, if you want to learn about it, we have materials, we can tell you about it. This is why it's important. It's a disintermediated, store of value. I think culturally that shift is massive, and it's sort of like the IPO moment for the asset class, very specifically Bitcoin at the moment. But I do think that over time that creeps in, that people are like, okay, I found Bitcoin really interesting. It did well in my portfolio, but also I read a few things about it. Now, when I see a newspaper article about it, I'll read about it. Well, what's this Ethereum thing that I keep reading about? And then, oh, smart contracts. Well, what are smart contracts about? And I do a lot of education. So I do education sessions for like YPO. I do a bunch of them, and I do a whole bunch for family offices and those kinds of things. And almost nobody who sits through them has actually seen a smart contract at work beforehand. And once you see it, once you touch it, once you're like, wait, hold on a second, you just put an asset in that smart contract and then borrowed actual US dollars, USDC or whatever against it. And it was just like you see the light go on. And it's just immediately like, oh, holy cow, that's really interesting. So I think there is kind of a natural progression to the way that people understand the technology from its kind of grimy beginnings all the way to what could the big institutions would do with this. And when they start to see it at work and then reading articles about, well, BlackRock has launched a money market fund on Ethereum, then it's like, okay, now we're starting to see how could this technology could really transform society.
Yeah, definitely. Very cool. You mentioned family offices. I'm curious. I believe your firm recently authored an article on how one could allocate to crypto from a family office perspective. Love to hear more about your thoughts on that.
Yeah, we talked to quite a lot of family offices. We do, like I said, we do quite a bit of education, and are lucky enough to know some great family offices in the space and who are invested in the space. And the one thing that I always found needed a little bit more information was that typically the first foray into like investing in crypto is like, okay, well, let's just like take some cash and allocate it to crypto. I'm like, well, what do you mean by crypto? And they're like, well, we saw this fund and we thought it was great. And you kind of, oh, well, just like, let's pump the brakes here. So what we did was, at the moment, most family offices, according to the UBS study that we reference in the piece that we did, 56% of family offices have some kind of exposure to crypto, but it's less than 1%, meaning like they're kind of probably just dabbling. But the 56% is looking and they're interested in adding to it. And the question is like, well, how you go about doing that? And so what we did was we took the sort of basic premise of what the average family office, how they structure their investments. So, you've got private equity, you've got equities, bonds, precious metals, artwork, whatever. And then we did a bit of a deep dive into the different kinds of exposure you can get to crypto. So there's lots of stuff you can do to self custody. You can hold Bitcoin or ETH or whatever. You can buy it all yourself. There are risks, there are challenges. You could also do the same through ETF structures. Well, that's probably a little bit safer. And frankly, there's no point in like paying a hedge fund manager to sit there and hold your Bitcoin for you. You might as well just do it on your own or through an ETF, like a low cost, safer structure. Um, and then there are the not self custodial like funds that you can use. Uh, there are of course venture funds. So venture is venture. Whether you're investing in crypto or AI or whatever, venture is venture. Meaning you probably have a pretty quick turnaround in some of these high growth frontier technologies, emerging technologies, where you're probably looking at more like a 3 to 5 year, but let's call it 5 to 7. That's fine. 5 to 7 years from now, you are no longer exposed. You can roll forward. It's true, but venture is venture, right? You hope that they can get some real home runs, and then you're out. And then you have liquid token funds. You have liquid tokens funds which can also generate yields and then compound those yields. You have delta neutral funds. Well, delta neutral crypto fund just means that they're using crypto as the asset on which to generate returns, but you're not really exposed long term to the upside of the technology. And so then knowing those different sort of types of investments, we went back against the allocations and said, well, you should take X if you believe in the technology, and that's a big if. If you don't, maybe don't invest in it at all, or like think about it differently. But if you believe in the technology, you think it could be a disintermediating force, then you probably want to say, well, then how much of like my equity portfolio actually should belong in, and in what part associated with like which of those different kinds of investments. And I think where we got to was saying like if you take this much from here, and then you get to about a sort of a 3.5 kind of percent of the total portfolio. I know some people out there are saying you should be at like 10-15%. I think for a family office that's way too high.
It's a lot of exposure.
It's a lot of exposure to a very risky asset class. That's about all I'll say. But I think aiming for this sort of like 2 to 5% and easing your way in, figuring out the best kinds of exposure can have potentially good enough exposure to this emerging technology.
What'd you get?
And that's all on our website in the contents part, in the content part of our website, which is just on the Golden Pear
Cool.
website.
We'll definitely include that in the show notes. What big takeaways do you guys get? In terms of, do you guys look at things like correlation, I assume, to like the traditional markets, or what were some of your big takeaways from getting into this, seeing what family offices are doing?
Correlation is really important, and I think it's, to be honest, it's one of the more granular elements that you want to get into when you start looking at each of the different types of those different investments. So, I think if you look at like the Sharpe ratios and Sortino ratios around, like a pure ETH investment, pure Bitcoin investment, it's something you want to look at the funds. And I think it's also, once you start getting on the fund side, you want to really focus in on like what are the fund strategies and how are those strategies applied. Because actually the Golden Pear, for instance, is very much modeled after the way that sort of crypto people who've been in crypto for a long time, how they run their portfolios. One of the elements there is like you can't run out of cash. You really should have cash at your disposal, because if you see, a major shock to the market, you can't be sitting there thinking and just licking your wounds. You need to probably um, be able to do something about it. So that's a very like elementary way of describing. I think some of the strategies that need to be employed um, are unique to the market because it is quite volatile.
Bitcoin's outperformed a lot of other crypto assets, if you will, over the last few months. Do you see that trend continuing?
Um, I have some views on it. I don't know that I'm going to be right or not. I do think that so far this cycle has belonged to Bitcoin. So even arguably Solana, which has outperformed, has suffered a bit recently, and a bit of the luster has come off because of some of their technological challenges. But uh, Bitcoin really has led the way. And I think it's good for the market. Uh, it is good for the market in one sense because Bitcoin is the most understandable, it's the most easily accessible, uh, blockchain technology to wrap your head around. It's digitally scarce. There, you got it. Like that's
Yeah.
it. It's all you really need to be able to understand about Bitcoin. And and yet, like, because when you start going in and talking about like, hey, Ethereum is really interesting because it has smart contracts, or eigenlayer because you're like, oh, it's a layer, but it's not a layer, and it sits kind of adjacent, but you can restake your Ethereum, your staked Ethereum, and then you can rent security. I mean, now people are starting to really get confused about what's what. And so I think actually like Bitcoin leading is kind of useful for the market for people to be able to kind of get their heads around. Um, but those other infrastructure pieces are crucial. And so I think, as this cycle progresses, and if we say we're in like the fourth or fifth inning, I think there will be a rotation, um, and that eventually, a lot of people will be looking at uh, uh, other technologies in the space, mostly because they are going to be used and used more extensively by other players. So even you look at BlackRock didn't build their own chain in order to release their basically tokenized money market fund. They launched it on Ethereum, and I think the use cases will help bring about more attraction and more interest in some of these other technologies that are available, and I think that's when there will be a huge rotation. The other thing to watch out for is the Ethereum ETF. So I think the market is broadly, viewing it as it's almost certainly going to be denied in May, on May 23rd, by the SEC. But if it is denied, I think almost immediately there will be yet another lawsuit. And I'm not a lawyer, but it seems to me that the facts that helped the judge make the decision in the Grayscale Bitcoin lawsuit will be virtually the same, if not more powerful, with Ethereum. Now, people will say, "Yeah, but Ethereum is a proof of stake," but I like those arguments didn't seem to come up in terms of the nature of the like consensus mechanism um, in the Bitcoin ETF. So I suspect that the SEC would have a hard time making that argument. And so that I think that narrative would be one to watch through. If it is denied, then through the end of the year, you'd want to watch that narrative as also being a significant narrative to sort of add more interest onto smart contract blockchains and applications that are built upon them.
Yeah. It's it's also kind of one of the things that's kind of interesting too. I think you might have pointed out to me when we spoke, a couple months back, but it was interesting to see that, how many, even after the Bitcoin spot ETF was launched, it was up whatever 60, 70%. But even during that time period, a lot of other assets, had outperformed Bitcoin, including Ethereum, if I'm not mistaken.
Yeah, Ethereum for a little bit there. A lot of people rotated after the Bitcoin ETF directly into Ethereum, ourselves included, and it was a good trade. And for a lot of people, but since that time, it's really, really reversed, and it's I think for a lot of people, the expectation that May 23rd, would see an approval by the SEC ended up, you know, kind of backfiring. I think that said, again, with regards to like the way that the cycle is progressing, I'm happier for it not to be all at once, because I think if it is widely accepted that there will be an Ethereum ETF, then not only for Ethereum but for most of like the smart contract blockchain ecosystem, all of that is likely to, I think, reach a sort of a, a, a
Yeah,
fevered pitch, which isn't really my favorite type of environment, to be totally frank.
I hear you. I like it sometimes. Definitely more healthy though to build some support, along the way we go.
Yeah.
I'd like to dive into kind of your thoughts on like layer ones, like layer twos, like you mentioned like chain abstraction earlier, but I'd be really curious to just see how are you thinking about these in general, and kind of, how do you see these I don't know, layer one, layer two battles playing out in progressing the ecosystem over time?
I guess I have a thesis. I think that, first of all, first and foremost, I don't think that like one smart contract blockchain wins. I think there will be several. It seems to me that the simplest, most straightforward answer at the moment is that um, Solana will be one of the winners. And Solana seems to have carved out this sort of like third major space. So you have Bitcoin, Ethereum, and Solana, and I think that's become more common to people for people to think that way. And their architecture is really quite interesting, and it is something that I think makes it very unique. And then you have Ethereum and its L2s. Uh, at the moment, it's got this sort of modular approach, meaning like it will incentivize more modules to be like interoperable such that the aggregate operates very well. But there's some real pieces missing in that, and there are pieces at the moment that are very frustrating. So it used to be that like, oh, Ethereum is very expensive and I just don't want to transact there. It's true. I mean, I have recollections of, pushing buttons and saying like, do you want to do this transaction for $200? And I'm like, well, do I want to or do I need to? I don't want to, but I will do it. Okay, so it was too expensive. And then now you've got, after Denkun, you have these tremendously inexpensive uh, areas, L2s that you can transact on. You've got L3 environments which are building out. So you've got protocols like Frax which are moving to their own dedicated L2s. You've got L3s which are a whole other design space which will open up. And the problem is that you end up with this very much, sort of segmented, segregated type of experience. And so I think the way that we look at it is that we need some answers pretty quickly from probably from a variety of different aspects. But the technologies to watch would be account abstraction, which would be that, sort of a simpler wallet, a more Web2 wallet experience where you don't have it's not just an EOA. You don't just have like the seed phrase and like signing capabilities. You have actual smart contract capabilities built into the wallet. You would then have that account abstraction working with chain abstraction tools, which would say and probably filling the gap there would be intents. And so intents are kind of like RFQs where you would, rather than through my wallet, I would say I want to accomplish this thing. I would like to take my $100 and I want to buy $100 worth of Ethereum. And then you would have all these sort of bot actors. They would rush to fill that intent, and they would go out all over all the different chains, L2s, L3s, elsewhere, everywhere, and come back, and they might even say like, oh, I'll give you like $101 because I found this arb opportunity between here and here. Whatever, who cares? And maybe they're gonna take a very small fraction for themselves, but that infrastructure needs to be simpler for the end user. And I think without account abstraction, chain abstraction, intents, and those things working well together, the whole environment is is the worst UX. It's really, really terrible. So that's kind of what the way that we're looking at it and the way we've liked to see it progress. So you see, some stuff on the account abstraction side, where you're seeing some interesting new EIPs progressing into some of the upcoming forks. You're also seeing on the intent side things like Across and Uniswap just had an announcement for sort of establishing standards for intents. So there's some really interesting developments that are going on, and we really need to kind of, I think, push into that a little bit harder.
Yeah. What does something like Solana kind of make more sense, where it's like lower cost fees? You don't necessarily need as many layer twos.
Yeah, I mean, I think it does there, but Solana equally has issues, right? Like there were periods this year where the chain was so busy that 75% of transactions were failing. And I think like people who come from ETH land and land in Solana and then press the buttons and they're like, yeah, okay, I did the thing, and the transaction just disappears. You're like, where'd it go? What? I have no, like, it didn't. It just doesn't even. It doesn't even exist. It didn't fail. It's gone. It's just so. And I think that is equally bad user experience. That said, I think they isolated some of the issues. They already did an upgrade. They're going to further upgrade, and I think having more client diversity through FireDancer when it comes will also help address some of the issues. So I don't think that, like, to be honest, nobody's nailed it yet. It is iterative, but it's iterative in exactly the same way that it was iterative during the development of the internet. And standards need to be developed, and there are ways that this will, move from slide along different spectrums, and but it'll be interesting to see what comes at the end of it. I'm not sure. I would just say that it's not just like one chain will win.
This has been great. Really appreciate your insights into the market, into what you guys are doing at Golden Pear. Where can people go to connect with you and learn more about your company?
Go to our website, goldenpear.capital. I'm also Allan at goldenpear.capital as my email address. And yeah, feel free to reach out. Always love like meeting people and seeing more about what's going on in the industry, and having great discussions. So it was really fun chatting with you today.
Awesome. Well, thank you so much, Allan. We'll go ahead and plug all that in the show notes. And thanks again for joining us.